What's going on, guys, and welcome back to another video. In today's video we're going to discuss 4 companies that I've bought today, and we'll also take a quick look at my overall portfolio. The 4 companies that I've added to my portfolio are Wells Fargo, Pepsi, IBM and Walt Disney. But before we dive into today's video, I just want to ask, if you haven't done so already, to subscribe to the channel, as I'd be very grateful if you could do so. And I just want to say thanks very much to the 75 people that have already subscribed to this channel, which totals 732 views and nearly 28 hours watch time. So thanks very much again. It would be great if we could get this channel to 100 subscribers before the end of the week. With that being said, let's get straight into today's video. As I'm sure you are aware, the stock market has been crazy over the last 50 or 60 days. The markets are defying logic and continually rising, which in truth they should be going the opposite direction. And because the markets are defying logic, it is quite difficult on any given day to know if the markets are going to be going up or down. But that's the best thing about being a long-term investor. It doesn't really matter, as over the long term, that's what we're interested in. One piece of advice that I would give to long-term investors is to not be getting caught up in the day-to-day noise. Remember that we're going for a long-term approach here, so even if the markets do go down, and they inevitably will go down at some stage in the next few weeks, that you keep your cool and remember that it is the long-term investing that we're interested in. When reading through market news this morning, the majority of the news was pessimistic. As you can see, the signs of a panic selling emerging, and we also saw news articles such as the stock market is becoming a dangerous environment. News articles like these will prompt short-term sellers to sell immediately. Again, remember, you're in it for the long term, so my strategy is going to be sitting and waiting to see if the market goes up further, then great, and even if the market goes down, if anything, I'll be buying more shares on the dip. So the first company I bought today was Walt Disney. Walt Disney is an American diversified multinational mass media and entertainment conglomerate. It is in the communication services sector and in the entertainment industry with over 223,000 full-time employees. The second company I bought is PepsiCo, which is an American multinational food, snack and beverage corporation which is in the consumer defensive sector and in the beverage industry, employing over 267,000 full-time employees. The third company I bought today was Wells Fargo and Company, which is an American multinational financial services company, which is in the financial services sector and in the banking industry, employing over 263,000 employees. And the fourth and final company that I bought today was IBM. The International Business Machines Corporation is a multinational tech company located in New York. It is in the tech sector and it's in the information technology services industry, employing over 352,000 full-time employees. One of the main reasons I bought IBM is because from the 1-year chart, you can see since the crash in March that it is going in an upward trajectory ever since, back to where it was before this. Again, like IBM's 1-year chart with Pepsi, since the crash in March, it is going in an upward trajectory ever since, back to its highs. I still feel with Pepsi that there is more money to be made in this stock at the present moment. As you can see from Wells Fargo's 1-year chart, it has taken a massive dive since the crash in March, and I do feel that once mortgages go back to normal, that the share price will start to go up rapidly once again. Obviously, in the short term, this might hover around the $30 mark, but as we are long-term investors, I feel that in the long term, this is going to go way back up to its 50s and 60s share price. And like the other 3 companies that I am analyzing in this video, as you can see, since March, it is starting to go on an upward trajectory yet again, and I feel that once the theme parks and movies, etc. start to release again, that the share price is going to go way up to normal prices. In terms of dividend yield and frequency of these 4 companies, let's first look at Walt Disney. Walt Disney has cut its dividend for the first half of the year 2020. This is obviously due to the closure of their theme parks, the delay of movie releases, etc. But again, as we're long-term investors, this doesn't really concern us, as once it goes back to normal, the share dividend will go back again, and we will continue to see the share price rise. In terms of Pepsi's dividend, it has consecutively increased its dividend in the last 24 years. It is currently standing at about 3.09% annually, which equates to $4.09. This dividend is paid out on a quarterly basis. In terms of IBM's dividend, they have paid a consistent dividend increase for the last 20 years. They are currently paying a very respectable 4.8%, which equates to $6.52, which is paid on a quarterly basis. Wells Fargo's dividend payout is currently at 6.7%, which equates to $2.04 annually, which is paid out quarterly. Another thing that I always look for when analyzing a company is the current top shareholders per company. We can see with Wells Fargo that the top shareholder is Berkshire Hathaway with 7.9% stake. Vanguard also has over 7% holdings in this company. In terms of IBM, the top two shareholders are Capital Research and Management with an 8.53% holding and the Vanguard Group with an 8.06% holding. Again, like IBM, Pepsi's two top shareholders are Vanguard with 7.96% holding and Second Capital Research with a 7.52% holding. And finally, Walt Disney's top two shareholders are Vanguard with a 7.16% holding and SSGA Funds Management with a 4.15% holding. So as of the 10th of June 2020, my portfolio value is $3,498, which equates to 8.3% portfolio growth. As of close of business on Tuesday the 9th, my portfolio was up over 11%, but the 3% decline was mainly due to the bank stocks going down today. But with that being said, I'm quite happy with my 8.3% portfolio growth in under 3 weeks. By adding these 4 stocks into my portfolio, there is now 12 companies in this portfolio. I have 1 share in Apple, 4 in AT&T, 21 in Bank of America, Coca-Cola, I have 16, 1 in IBM, 3 in Johnson & Johnson, 1 in JP Morgan & Chase, 1 in Pepsi, 3 in Waste Management, 1 in Walt Disney, 2 in Wells Fargo, and 2 in 3M. On screen now is my transaction log so far for June. We bought 4 shares in AT&T. We got the $2.58 dividend from Johnson & Johnson. Bought 1 share of IBM, 1 of Pepsi, 1 of Disney, and 2 of Wells Fargo. In terms of my portfolio's diversification, we have 3.7% invested in the communication sector, which equates to $129.04, 3.52% in the consumer discretionary sector, equating to $122.72, 26.25% in consumer staples, equating to $916.30. I have 3 companies in the financial sector, equating to 20.97% of my portfolio, or $731.95. 12.86% of my portfolio is in the healthcare sector, equating to $449.04. 9.45% is in the industrial sector, equating to $329.96. 13.87% is in the tech industry, equating to $484.36. And finally, 9.39% of my portfolio is in the utility sector, equating to $327.84. So as of the 10th of June, my portfolio is worth just under $3,500. Besides looking at your portfolio's diversification just in numerical, I'd also recommend looking at your diversification visually, such as on a pie chart, bar chart, etc. By doing so, this gives you a better outlook if your company is over or under diversified in a certain sector. For example, looking at my pie chart, you can see that I have quite a lot invested in the consumer staples and financial sectors, with not a lot in the consumer discretionary or communication sectors. So going down the line, I'd prefer to have all of these kind of balanced out a bit more. So my plan for the next few weeks is that because the markets are continually going up in value, it is making me quite concerned, as all the economic factors are telling me that the market should be going down in value. So my plan is for the next few weeks to save up as much money as I can, and if the market continues to go up, brilliant, but if it goes down in value, I'll be buying on the dip and holding. So after saying all that, I'd love to know what your guys' views are on the current market. Do you think it's overvalued or undervalued? Do you think it's going to continue to go up in a bull market, or is there a bear market on the horizon? How is your current portfolio doing? Have you bought any stocks, or are you selling any of your stocks? I'd be delighted to hear your views in the comments below. So with that being said, thanks very much for watching as always, And please like, comment, and subscribe. Thanks again, and I will see you guys in the next video.